Today, we're diving into a new fund offer that's designed to tap into the single biggest powerhouse of the Indian economy. So let's get into it. This is our explainer on the brand new Kotak Services Fund. What if I told you that one single sector is responsible for over half, 55%, of India's entire economic output? It's true. And that massive engine for growth? Well, it's the services sector. And this new fund is betting its entire strategy on it. So to really get a handle on this, here's what we're going to cover. First, what exactly is this fund? Then we'll get into why anyone would focus just on services. After that, we'll look at the investment strategy, peek inside the portfolio, and wrap up with what I think is the most important part, the risks and who this fund is actually for. All right, let's kick things off with the absolute basics. What exactly is this new fund offer that's on the table? So, this is the Kotak Services Fund. It's an open-ended equity scheme, which basically just means you can invest or take your money out pretty much any time after this initial offer period. The key thing here is that it's a thematic fund, meaning it's laser-focused on just one thing, the services sector. The new fund offer, or NFO, runs from February 4th to the 18th, and you can get started with 5,000 rupees. The big takeaway here is that this is a concentrated bet on one specific slice of the economy. Okay, so that begs the question, right? Why build an entire fund around just one sector? Let's dig into the thinking behind this whole idea. You know, this quote from the fund's own documents really says it all. We're not talking about some small niche market here. The services sector is the biggest piece of the pie when it comes to India's economic value. And it's not just about the numbers, it's about people too. It employs almost a third of our entire workforce. And you know, this isn't some recent trend. What's really fascinating when you look at this chart is just how consistent it's been. For the better part of a decade, the services sector has reliably made up over half of India's gross value added, or GVA. And GVA is just a way of measuring the total value of everything produced. That kind of stability and sheer scale is exactly what makes it such a compelling theme for an investment. So, what's powering this massive engine? Well, it's the big trends that are changing how we all live. Think about it. Rising incomes and all this digital adoption are creating a huge appetite for everything from fintech to online shopping. And at the same time, better logistics and more people getting access to banking are opening up brand new markets. It's giving the whole sector this really powerful long-term tailwind. Okay, so knowing why you'd invest in services is one thing. But how the fund managers actually go about picking the stocks, that's just as crucial. So let's pop the hood and take a look at their strategy. The fund uses an approach called GARP, which stands for growth at a reasonable price. The easiest way to think about it is like this. You're not just shopping for the fastest car on the lot. You're looking for the fastest car that also happens to be a fantastic deal. The whole point is to find these amazing high-growth companies without, overpaying for them. So how do they find these GARP opportunities? They use a simple three-step framework they call BMV. First step is B, for business. Is the company high quality? Can it actually scale up? Second is M, for management. Is the leadership team solid and trustworthy? And finally, V, for value. Does the stock price actually make sense for its growth potential? It's all about looking at each company from the ground up. All right, so that's the theory. But what does this fund actually plan to own? Let's take a look at what the portfolio could look like. Whoa, okay. This is really revealing. Based on their sample portfolio, a massive 61% is parked in financial services. We're talking banks, NBFCs, fintech companies, the whole lot. IT and telecom also get pretty decent slices. This shows a really heavy concentration, especially in financials, and that's something any potential investor absolutely has to be aware of. But here's the interesting part. Even with that big concentration, the services theme itself is incredibly broad. I mean, look at this list. It covers everything from hospitals and e-commerce to hotels and logistics. This gives the fund managers a lot of flexibility to shift their focus to different opportunities as they pop up, all while staying within that broader services theme. We've seen the potential opportunity, but now we've reached the most critical part of this explainer. Let's talk about the risks and help you figure out if this fund might actually be a good fit for you. So, let's be crystal clear about this. The official riskometer for this fund is set to very high risk. That's not a suggestion, it's not an opinion, it's a formal classification. The fund is telling you, right up front, that this investment comes with a significant level of risk. So, where does all that risk come from? Well, the main culprit is concentration. See, a typical diversified fund spreads your money out across a whole bunch of different sectors. But a thematic fund like this, it puts all of its eggs in one basket, in this case, the services sector. And if that one basket has a bad year, the entire fund feels it. So let's just drill down on the three big risks to keep on your radar. First, as we just said, sector concentration. The fund's fate is tied directly to how well the services sector does. Second is market volatility. Service industries can be cyclical. They have big swings up and big swings down. And finally, there's liquidity risk. Because the fund is so focused, it might be tougher to sell stocks quickly if a lot of investors want their money back at the same time. So putting it all together, who is this really built for? The fund documents themselves are very direct. This product is for investors who are looking for long-term growth and, crucially, have a higher appetite for risk. This is absolutely not for someone who wants stable, short-term returns. And that brings us to the final and most important question. It's the one you really have to ask yourself. Does a high-risk, theme-focused fund like this one actually align with your own financial goals and your personal comfort level with big ups and downs? As always, it's a really good idea to talk this over with a financial advisor to see if a product like this is truly right for you.